Good morning. Today is Thursday, June the 22nd. The time right now in Singapore is 11:27 in the morning. We have about 33 minutes to noon, and let's recap what happened on Wall Street overnight. Last night we have the Fed Chairman Jerome Powell testifying in his biannual testimony to Congress. This is a two-day event. Yesterday night was the first, and in which he reiterated that the interest rate is likely to climb higher towards the end of the year, and he still maintained that he's looking at least maybe another half a point interest rate hike by the end of the year, meaning to say that there is a likelihood that there will be two more rate hikes from now till the end of the year, starting with July. So this testimonial was less hawkish than what analysts was expecting, resulting in now analysts thinking that instead of having two rate hikes, we are maybe looking at only one. So that caused the dollar to basically come off. So because that is possibly signaling the end of the rate hike cycle for many market participants. So this was his message, and it didn't came out the way I think would like it to come through. So basically the market reacted. In the US equity market, we can see that equity prices remains a little bit depressed. There was no rebound last night, and in the Dow Jones itself, we saw the Dow Jones continue to slide to 33,876.2 overnight, and it is currently stabilizing. There could be a minor rebound followed by another dip below this week's low so far towards the end of the week itself. So let's watch out for what happened going into the end of the week itself, which is coming out tomorrow. So basically, I do believe there is a possibility once this corrective rebound ends, there could be another rally attempt beyond the 34,588.7 that we saw so far. So let's keep an eye out for that possibility. Over in the S&P 500, we also see the S&P 500 pulling back with all the mega cap actually coming off their highs. The high traded so far this week is 4,448.5, which was last traded on Friday. If you remember, Friday was a quad witching day in which there's a lot of options that expires on the very same day, including options on stocks, options on futures, and there are many all four categories of options actually expire on the same day, and we can see that it coincides with the peak in this run, and it is of course no coincidence. Okay, so possibly we can see profit taking coming into the market. So if the market can stabilize somewhere between 4,003 to 4,350, maybe there is another possible rally attempt to complete this 5-wave rally from 3,808 beyond 4,488 that we saw so far. Okay, so in the Nasdaq 100, we also beginning to see a more pronounced pullback on Monday. On Tuesday, we don't see very much of a pullback, but now we're beginning to see a little bit more evidence that even the Nasdaq 100 is coming under profit taking. So the high traded so far this year is 15,284.65, which was last traded on Friday, and market may actually drift lower towards the 14,430 to even as low as 14,000. So hopefully this area can actually find a base before the market attempt one more rally to finish the entire 5-wave rally that we see from the beginning of the year. So over in Asia, we can see that Asian markets are still holding on very well. I'm talking about the Japanese Nikkei 225. The high traded at 33,772.9 is basically not far away. Today we have a very weak rally attempt, but it looks like the pullback on Wall Street may actually affect the price in the Nikkei 225 going forward. And if so, we do see a possible pullback to the 32,000 levels to as low as 31,000. So between the 1,000 point range, anywhere between 31 to 32,000, we could possibly see a base before the market attempt another rally. Whether it will succeed remains to be seen. In the Hong Kong market, we can see that this morning the Hang Seng index actually dipped to the week's low. So far, we have a low for the morning session at 19,174.1, and this could actually be a possible bottom for now before we see a minor 50% retracement from where we are right now, between the 20,155 that we saw last Friday and this morning low. Maybe the market may actually stabilize somewhere between the $1,980 80 points before it sees another dip to complete a potential three-way pullback before it make another rally attempt towards the 21,000. So do look out for that possibility as well. In the mainland Chinese equity market, the CSI 300 continue to dip, and right now the market is sitting on and just marginally breach the pivot point here at 3,865, and let's see whether it will continue to dip lower. If it does, I think that it's going to be evident of buying interest between the 3,760 to 3,850 levels, which previously has managed to hold this market slide. So if we can farm another bottom, then we possibly will see a triple bottom here, and that could be a basis for the market to rally again. Okay. In the energy markets, we see that the West Texas Intermediate crude oil continue to rally after one day of dip, and the market now is back above $70 per barrel to as high as $72.47, which is the highest this week so far, and it does looks good for the market to take out $75 per barrel before it attempts anywhere between $78 to $80 per barrel, which is my original target. In the gold market, we can see that because of the dollar weakness, we see a bit of a rebound in the precious metal market, and this one low so far yesterday at 1,919.20 could basically be possible bottom for this run. And if we see a very sustained rally above $1,984, excuse me, then possibly we can see a temporary bottom for the gold prices, and this could be a good basis for an extended run going into July. Over in silver, we can see that silver actually gone below the month's low so far to register a new low at $22.49, and it is just marginally below my ideal bracket price to buy. Right now, the bigger range, of course, is going to be $22.28 to $23. There's an inner bracket here at $22.60, which the market went below by slightly over 10 cents to a low of $22.49.8. So we can see that this could be a basis. If we see further confirmation that the bottom is in place, this market may actually rally beyond $24.50 we have seen so far in June, and possibly going up to challenge the $25 to $25.50 range. The dollar has been on the back foot. Yesterday, we see the market rally to 102.37, 38 levels, and then come under selling pressure, which is no surprise because this area has been highlighted previously in previous updates. The area between 102.20 to 102.65 could possibly see the re-emergence of selling interest, which it did, and now the market is challenging the lower end of this current run in the dollar index. The low so far is 101.58, and this low may actually be taken out today, and if so, the market may extend lower towards the 100 point level, anywhere between 100.60 or 80 to 100.50 could be a bottom here. So let's watch out. Okay, in the face of continued weakness in the dollar, we possibly will see the extended run in major currencies, including the euro versus the dollar. Now, the euro dollar has already taken out last week high at 109.70 and is on its way towards the target of 111, possibly to test 110.80 to 110.90 levels. Okay, just below the 111. So do watch out for that eventuality, and once the market reach there, look out for a more substantial pullback to somewhere between 108.5 to 108.90. Now, in the sterling have yet to break out of last Friday's high, but I think it is building up a good case because yesterday we have the release of the UK CPI numbers, which came in hotter than expected. And going into today's trading, we have the Bank of England likely to hike interest rates. So that should actually underpin the sterling value versus the dollar. So that could be a basis in which we can see sterling rallying higher beyond 124.850 levels towards possibly the 130 even levels. Okay, so do watch out for that eventuality as well. Aussie dollars has actually come off, but before a rebound, the market right now could possibly extend a little bit higher to 0.6820 to 0.6840 before it comes down again to complete a potential three-way pullback towards the 0.6630 to 0.6680 and before it rally again. Okay, in the dollar Canadian, we can see dollar CAD continue to weaken below last Friday's low of 131.77, and it's currently trading at 151.55, and it looks like it may dip even lower, but not by very much. I do expect somewhere between the area between 130 to 131 that we possibly will see a bottom in this run. Okay, so do watch out for a near-term bottom in the dollar versus Canadian. In the dollar yen, we are beginning to see signs of a reversal. Now, the market actually rallied higher last night to 132.36, and it ended up in the 4 hours time frame with a reversal pattern. This is quite clear cut. So from here onwards, I would say that the odds of the dollar yen coming down is a lot greater than in recent memories. So this could see prices coming back to test the 139 even levels and maybe even lower. So do watch out for that move downwards, and this could be worth something like 400 pips. So it could be quite sizable if you want to take advantage. In the meantime, we can see that Bitcoin has gone on a tear. Overnight, we can see that the Bitcoin went up to almost 31,000, which was my original target all the while. The higher traded this morning was $30,755 before we see a little bit of a pullback. Now, if we do see a more sustained pullback, ideally in a corrective manner towards the 27,000 to 27,750 dollars, that could be a buying opportunity. But from where we are right now, whether this pullback may actually occur remains to be seen. But if it does, that will be an excellent buying opportunity, because the chart here is telling us the big boys are definitely in. And of course, the most recent news followed by the BlackRock filing for a ETF for Bitcoin is followed quickly by another ETF, not ETF, an exchange launched by major US securities brokerages. So that could be the underpinning and the evidence that the big boys are definitely muscling into this space after they take out Bitcoin, after they take out Binance and Coinbase. So you can see this is likely to be orchestrated together with the help of the US Security Exchange Commission, the SEC, going after both exchanges. And shortly thereafter, we can see that these big boys are announcing plans to muscle into this space here. So this is the reality of the marketplace here. The big boys will always provide the narrative why the market is bad and causes market to depreciate. And then once they are sufficiently positioned, they will change the narrative. And now this is exactly what we see. So this is all I have for you for today. In the meantime, you take care. I'll come back to you with another update tomorrow. In the meantime, you take care. I'll see you. Bye-bye.